Good afternoon. This Tuesday, January 14th, big day today. Another follow-through buying session from last Friday's WASDE crop production supply-demand data. The corn getting to one tick shy of $4.80 before it started to retreat for turnaround Tuesday, while beans got to $10.64 and retreated almost 20 cents into the closing settlement. On the trade, the woodshed for the Trump traders has been pretty good for the last few days, putting almost $1 a bushel on beans since Christmas. The corn trade as well. Remember, they told us we would never sell beans again. The crop out of South America is so huge we can never rally. Soybeans are heading straight to under $9. Well, here we are. 10.5 plus. So the weather is now the focus after the report. That's what we're going to look at now. We go into next week. The heat is intense right now. We're talking 103 to 106 across Argentina, key growing areas. It's been dry. Some showers start maybe Thursday, Friday, but the rains that were forecasted for next week, they're there. They're just not quite as widespread as they'd hoped they'd be. Those widespread rains, again, oh yeah, they're pushed back another 4 or 5 days, just like we were 4 or 5 days ago. They're always out there on the latter part of the 10 to 15 day models. So let's take a look at those quick, and let's see what the charts are telling us. Here is the GFS. This is through Thursday, January 23rd. Remember, we were supposed to be soaking rains here. This is Santa Fe. This is Cordoba. And here is Buenos Aires. No soaking rains there, southeast Buenos Aires. But this widespread swath of moisture, it's not there yet, is it? But there are showers that are going to be showing up, but the heat does break after this weekend. As we go towards later into the forecast through Sunday, June 26th, now they try it again. They try to bring in these widespread rain showers, 1/2 to 2 inches of rain, a little more further coverage, like about 60 to 70% coverage. Here is the Euro model. It's always been a little wetter. Here is Cordoba, that's Santa Fe, excuse me. Here is Cordoba down into Buenos Aires. Obviously, the southern 60% of the growing area has moisture developing late next week. Meanwhile, we go through the heat. Here is the temperatures today. Through the 15th, I should say, widespread heat for Wednesday the 15th, 90s to 100 plus is what's going to take place, and I mean upper 90s to 100 plus until the weather starts to break. So what did this do? Well, we definitely had pushed higher in a wave 3. We had elevated our wave 2, made a big deal about this blue line last week. Every day I kept telling you, well, it's more than 3 days when that bolt was a fake blowout, 3 days above the blue line, and down we went. Here we were day 10 already last week, Thursday, telling us something was up, 38% retracement, shallow wave 2, bolting us in a 3. Now, remember we had shown you 3 equals 5 at basically 1055. Well, we pushed through that to 1064, and it's actually almost at 1070 would have been a wave 3, would have been a 1.214 of 1 for the Fibonacci guys that understand this. Fibonacci numbers are 0.214, which is the opposite of 0.786. Don't try to remember too much of this if you're not a technical trader. So you got a 1.214, 1.382, 1.5, 1.618, 1.786, and then double. So the point is, we could have made it to 70, and that would have been a 1.214 extension before we do a 4 pullback. Now, if you look at the continuation chart, which is more important as any daily chart because they always expire, so you can never continue on with the counts. We are currently in a 4th wave bounce, which, by the way, can go all the way to the bottom of wave 1, which would be $13 if it wanted to in an ABC format here. And we are in ABC, but here's what I noticed today and why I came out and made the hedge recommendation. You had an hour to do it once I put it out to sell the remaining 25% of our beans at 1052, 1054. That's where they traded for an hour. The reality is that's going to be where our average sale is going to be for the beans, for the old crop, as this goes back to 2022, way back here for the highs. Here's a whole course of last year, and this is spot contract last year. But what I want you to see is that we came just shy of the purple line. Well, here we were just shy of the purple line. Here, back in 2022, we were just shy of the purple line when the bear markets, that would be 2023, excuse me, when the bear markets started emphasizing themselves. Here was a miss of 7 cents. Here was a miss of 4 cents. When I watched it today, it was a miss of 5 cents. And I said, wait a minute, still in a bear market for beans as far as everything is still concerned, given the Brazilian crop. Maybe we better act on that. So that's why we made our finishing sale on the old crop beans, but we got to get some new crop going. And if we have weather spikes yet still because of Argentina, if those rains don't manifest next week, well, then we'll dig into our new crop selling potential on that, because we will have less acres next year in beans. And what if we have a crop problem next summer, which can elevate new crop beans, especially if there's 2 to 3 million acres less planted for soybeans? Now moving on to corn, getting extended on a wave 3 as well. Just so you know, wave 1 equaled wave 3 at 275. Continuation resistance we had was 265. That's why we made that sale there rather than hold out for the higher number. But still, the high today, one tick shy, would have been wave 3 is a 1.214 of 1. So this length here was 1.214 times this length when it hit the high of the day, less one tick, and then turned lower. But we'll see here. We did no damage to the charts at all here. Could still be climbing in wave 3 for maybe another new high, maybe good export sales numbers coming up later this week or some other development. But still, the shorts are buying. Not much spook from the longs that are now the index fund longs, which we told you last August, who were short 300,000 contracts. We said, watch them turn this thing around 600,000 contracts and be long 300,000. Well, that they've done, but they could easily go to 400,000 contracts yet. And so we're still waiting for further strength before I make another corn sale. Could get into that 285 range, 279 3/4. Maybe that was close enough. We'll see. Maybe we do get a wave 4 pullback now before our final 5th wave up. Now, all these wave counts, these are into the future. They're not defined by the calendar. So we have a final wave 5 of 3 in place, and then a 4-wave sell-off. Maybe that is February, March, and then this 5 could be our typical April, May high. Corn has a tendency of peaking early in April or early in May because the South American crop for corn does not pollinate well. And that could be our potential rally later on. Or it could be China buying corn as Trump probably gets an early win on any trade snafus and China says, okay, we'll buy. And maybe they start buying in February, March, which is when China typically buys our corn, is in February, March. So you see the variables continue to be endless for the potential rally in corn yet. Besides what the Trump traders want to tell you and all the negative prognosticators of how we should never grow grain again because we're never going to be able to sell it because Brazil will grow it and undercut us in every way. Well, yeah, but there's our domestic needs as well. We can't import from Brazil either. Moving on to the wheat trade, I'm just acknowledging pushing the apex and failing again for wheat. It just is caught. All we can say is this. We need to get above the 570 range for Kansas to tell us something is actually breaking out in here. I think the problem is the market is pricing in an end of the Ukrainian war, Russian-Ukrainian war event that could put weakness into the wheat trade, into the new crop. But then again, the winter wheat crop for Russia went in pretty lousy in shape. We need to see their breaking of dormancy in March. And if that is as lousy as it went dormant, well, then this could get interesting, as everything's always about Russia, Russia, Russia. Crude oil. Of course, President Biden last week doing what he could have done 2 years ago, applying the sanctions against Russia for the invasion into Ukraine, bolting crude oil much higher than we would have anticipated, changing our apex rule. Now everything just continues to be as we had said back here. Everything's an ABC. I mean, you can see this ABC, ABC for a larger A, ABC, ultimately with a B wave low because this is an ABC. And now we are working again a C wave bounce. And so with that, we're just caught in a cluster of sideways action, confined by $80 on the top side and by the low 60s on the bottom side. But make no mistake, in the grand scheme of things, we are in a downward trending mode on this market, and drill baby drill should win, and President Trump could probably use the oil sanctions in his favor against Russia to release them, take them away, which of course would be negative to oil pricing, and which is why we did not this year. After the last several years, we've always been buying fuel at the end of December. In the new year, we did not do that this year in anticipation of we have this downward bias into the second quarter when you need to be buying the fuel. So that's where we're at on that for anybody having questions on it. Now let's talk about cattle. Wave 3 is what we're in. 2-day correction here. We did satisfy 3 could be equal to 1. These legs up here match right there. With that, we do have the prospects. Maybe wave 3 has peaked out here under 200. Get a 4th wave pullback before we push higher, with likely the April contract making our final lift well north of 200, possibly with the kill market going to 210, 215, dragging the board to 205. That could be in the future. So we'll see here. 2-day break should bring in buying interest tomorrow. That's what the bull markets have been doing. We'll see if it does again, especially when we go to feeder cattle. 2-day pullback today could not close more than 1 day above that 268 resistance, which goes back to the September 15th high on the spot contract in 2023. That needs to be overcome. Otherwise, we do believe these equal legs take us to 275. And so we're waiting for that. We need to see buying show up tomorrow to get us to 275. And of course, when you're in the blow-off high, that does not mean it stops at 275, but the market does not want to give you the opportunity to price where the hedging index, where the feeder index is. When you get late in these bull markets, nobody wants to be the one caught holding the bag, and that's why you cannot hedge a profit and haven't been for a year. But on the feeder cattle contract, that's where we measure to 275. This is Eugene Grander with Heartland Investor Capital Management. Hope you find this information useful.